Crude prices, remember, have been inching up every day for the past week. Crude prices climbed nearly 6% on Friday and are currently hovering over $90, with benchmark Brent posting its highest weekly gains since February. Now, investors are pricing in the possibility that the conflict in the Middle East could widen as Israel begins ground raids inside the Gaza Strip. Markets expect, and commodity analysts are bullish on crude oil prices, remain alert to any indication that Israel-Hamas conflict could expand into the oil-producing region in the Middle East. Brent crude oil is trading over $90 a barrel. As I mentioned, will it inch towards $100 a barrel? Let me also get in Kartik Malhotra to join us. But Amit, what are the indications that it will in fact inch towards $100 a barrel? And if that were to happen, what is the immediate impact on current account deficit that you are factoring in?
Right. So I think, the global crude oil market is on tenterhooks since the last week or so, since the last weekend, because of the tensions in the Middle East. So I think at this point of time, it's a little difficult to estimate whether it's going to go to 100 or 110, or whether it's going to come down to 80, or it all depends on how the conditions sort of evolve in the geopolitical scenario within the Middle East. Whether the Israel-Hamas conflict is going to escalate, then there is a very good possibility that it would go to $100. Another way of looking at it is that whether Iran is going to get involved in this conflict and going to sort of directly engage with Israel and the Hamas. So there is a risk of escalation of this conflict. As the things progress, then only we can sort of make a estimate. But having said that, even if it touches $100, I don't think it's the end of the world. We have seen, in the previous instances also, like last year when the Russia-Ukraine crisis happened, we were able to import discounted oil from Russia. I think there was a news report from Financial Times this morning that the current discount, which is about $2 to $5 when we are importing crude from Russia, that could actually double to about $7 to $10 if the prices actually go up.
Okay.
So I think it's not going to impact so much. In any case, for 3 to 4 months, everybody is hedged out for higher prices. So even if it moves 10-15% above, it's not going to be a very sort of a medium-term dampener. But if it sustains and the escalations sort of stays as they could have, then it's a problem. So I'm not worried about short-term jerks to $100 and coming back to $90. If it goes to $100 and stays there for 3, 4, 5 months, then it becomes a sort of a problem as far as the current account deficit or fiscal deficit is concerned. Because remember, it's an election year, so I'm not sure how much government will be able to pass it on to the consumers as well.
Now, Amit, after the Ukraine war broke out, we saw an initial spike up where, Brent crude even went up to $128 barrel sort of a level. But after that initial spike, the prices pretty much moderated. Do you expect a similar sort of, impact given from this war as well?
So firstly, let's hope the war does not escalate, because already, a lot of human damage has already happened. That's what I expect, that even if it shoots up temporarily, it's going to again come back down, because, the kind of economic situation which is there globally, the demand would start getting hurt. India is still in a sweet spot because of the discount from Russia, etc. But not a lot of countries will be able to take in the higher crude, especially the European countries. So my sense is that nobody really wants crude to be higher, because it starts impacting discretionary consumption. It starts impacting the demand. China is also already in a sort of a demand slump. So they don't want really that the other growing parts of the global economy, they also start doubting the demand
Right.
going forward. So my sense is that, I'm not too much worried about the short spikes, but yeah. if it's sustained, then it's a problem.
All right.
Amit, just wanted to check with you. Hi, nice to have you back with us. Good afternoon. Just wanted to check with you. So, of course, India is more likely to be insulated, I believe, than the rest of the world. But the Western world, which has directly imposed sanctions on Russia, will not have that cushion of Russian oil like India does. So, in that context, there is, like you mentioned, discretionary spending in the US is going to get cut down. But US, Europe, developed bloc, Western bloc, in itself, our sort of trade with them is then likely to suffer on account of higher crude prices. So, our own direct impact of higher crude on India may be elusive, but then an indirect impact could be fairly significant, isn't it?
Yeah, it also depends on what kind of sanctions comes in. Last year, like in the Russia-Ukraine war, we saw a lot of
I don't think the West can pretend to have any sanctions this time around on anything in the Middle East. I think they are completely dependent on Middle East and don't really see a threat like they do in the case of Russia. So I think sanctions this time around are not going to happen.
And come to think of it, I think the only people who don't want prices to go up are Western nations.
True.
People who do want prices to go up are the Middle Eastern countries.
Yeah. So I mean, it depends. Once the geopolitics takes over the economics, then sanctions cannot be totally ignored, I believe. So one has to wait and watch and see, if it actually escalates. So I'm not sure, any of the Middle East countries are in sort of an economic situation where they can afford to. They would love to have, higher crude, but whether they can afford to have sanctions or not. Already there are. India is already actually a top crude supplier, sort of taking crude from Saudi Arabia and Iraq as well, apart from Russia. So, I don't think India will be participating in those sanctions in any case.
Okay, not participating, hasn't participated so far. Amit, thank you very much, sir, for taking time out. Thank you for joining here on News9. But staying on with crude prices and its impact on India specifically, what sort of immediate impact are we looking at? We know for sure prices will not be, if the prices continue to escalate, if they continue to go up, they're not going to be passed on to consumers. That is not happening. So what impact are we looking at?
So election year, consumers are unlikely to get impacted by any sort of an economic impact of rising crude prices. Now, I believe up to $100 is something that the Indian economy has already factored in. I think a comfortable range is between $85 to $90. That's a good range to be in. Anything below 85 obviously is a blessing, but anything higher than 100 can also be cushioned for. But if we were to breach the $100 mark on crude, then we start smelling some sort of trouble. And now if it were to go up all the way to 120, 125, 28 as we saw at the outbreak of Russia-Ukraine war, then we are definitely looking at trouble, because this trouble is actually a two-front trouble. Number one, of course, the crude prices in general are going to impact the economy. Second, even with the Russian oil discounts going up, that price capping of $60 a barrel and then a discount thrown in, which could now go up to as much as $10 or something, is also not going to be sustainable for a very long term for Russia. Given the fact that Russia and India in any case are finding it difficult to sort of, reconcile their trade. So immediate impact of crude up to $100, all right. Beyond $100 is a cause of concern, and we'll have to look at ways to mitigate that.
Okay, and how are OMCs reacting to that? It's already touching $90 a barrel, up from 80 to 85, where it was just at the start of last month. Since last month, in the last week particularly, we've seen quite a swing of a pendulum-like swing, $10 here, $10 there. How are OMCs reacting to it?
I mean, today most of them were trading flattish, but over the last couple of months we have seen a significant correction in across the board, from BPCL, HPCL to Indian Oil. We have seen correction playing out in OMC companies, because as Kartik said, that these companies are not able to pass on that burden of rising crude prices to the end consumer. So it's eating away from their profitability. Whereas upstream companies, which are in the business of exploration of oil, have been benefiting from the rise in crude prices, and we are seeing them surging around 15 to 20% in the span of the last 1 month or so.
Okay. Okay, so clearly not a direct impact on people, but an impact on OMCs and also on government coffers, Kartik, because revenue, excise duty collection or excise revenue will take a hit.
So that, of course, I think is again part of the direct obvious impact that we will want to contain the shock to the end consumer, and hence as government we'll want to absorb as much of that shock in volatility, especially on the upside, as possible. But I think the indirect impact is something that not a lot of people are talking about right now, because US and Europe don't have the option to import oil from Russia. They're the ones who've imposed sanctions on the state. So they will willy-nilly have to depend on oil from the Middle East. So now if the prices go up to about 120, then even their economies take a beating. Okay. And their economies, we've seen, have taken a far deeper, greater, more painful beating than anything that India or China, for that matter, have been subjected to, who have been taking oil from Russia.
Okay.
Now, if there's a beating on Wall Street, if there's a beating on US companies, and if the interest rate cycle were to continue to go up, we've seen a pause right now, but then if that up cycle were to resume again, then you're looking at discretionary spends being further cut down by US companies. You're looking at an impact on India's exports, and when India's exports get hit, then India's services sector, which in any case I think has been a little tepid for the last almost 3 to 4 quarters, is going to be far more somber than what we want it to be.